Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey traders, checking in on the broader market. So we ended Friday with a lot of weakness in quadruple witching into the end of the day. And then when futures opened last night, we saw further downside. Fortunately for bulls, we've made a fairly significant recovery from that weakness. And unfortunately for technical analysts, we have dividends being distributed in QQQ, XLV, XLF. So just like SPY, just like we can't look at previous levels from pre-dividend for reference, now our individual sectors, we can't do that either. So again, sticking with the S&P 500, you can also use Stockcharts.com. The free version of their chart adjusts for the artificial changes in price. So how I use that is, this is the site I used to use for years before TradingView, but I just go to it and I pull up SPY, and that tells me, okay, what was the high of last week on SPY? 314.38. So I can say, all right, the adjusted price level for SPY to break to a daily higher high is 314.38. So I could use the S&P 500 futures chart, but if I want to know what that SPY level equivalent would be, there it is. So again, for QQQ or whatever else, you can use stock charts for the adjustment. So we ended up seeing the bulls with some strength today. It's worth noting that 3 news reactions that we've seen over the last couple of weeks have all been Texas COVID headlines. I have no doubt in my mind whatsoever that algos and bots are correlated to Texas, COVID, and however else they read those headlines. So here at the end of the day, 311 to 309, that is a reaction to a Texas COVID headline. So just something to keep an eye on. Not sure why it's specifically Texas that we are seeing the reactions in this chart, but this is the 3rd example, which is why I am so certain now. After the first time, I said, really, is that what we're reacting to? Second time, pretty sure. Third time, yeah, that's it. So here we are recovering in after hours, breaking that resistance level. If we're looking at the S&P 500 futures chart, one thing the bears can cling on to in the short term is looking for a 12-hour lower high. So here's the 12-hour chart. Anything under 31.56 is a 12-hour lower high, and the bears would just be hoping for a rejection from that level and for a tightening 12-hour range to continue forming. We can look at it on the 6-hour chart, just a different perspective. High, low, possible to be watching for a lower high and a tightening range if that is indeed the case. IWM. So IWM did break short-term support, but again, no bear follow-through. What we have to see out of the bulls now is a break of daily resistance. Trying to set the higher low and have to break 146.69. I can use that level because it is after the dividend, but that's the level it has to break to confirm the daily trend is back in favor of the bulls and to be looking back at the high of the COVID bounce. The names that took the markets bullish today are our lead bulls. It's the Amazons, the Apples, NVDA all-time highs. So the lead tech bulls taking us higher. So I'm going to be watching now for if the S&P 500 bulls keep control. And if we keep seeing that sector rotation, then we'll be watching for the laggard names, the airliners, the cruise liners, the gambling names, the hotels, the MJ sector. We'll be watching for them to react bullish second if this broader market weakness keeps up. We saw weakness today in SPY for about 10 minutes to start the day, and it was from XLF and XLV, and QQQ held on just fine, which is why the S&P 500 bears did not see significant follow-through. So QQQ, again, I'm looking at this chart and I say, okay, failed to break the high of Friday, but with the dividend distribution, if that didn't happen, we would have broken the high of Friday. The adjusted level was in the 246s. So it's just all-time highs now for QQQ. And again, if you want to look at the stock charts level, we would pretty much be right under that all-time high right now. Tech sector bulls keeping full control. Let's run down our lead bulls. Amazon testing all-time highs. Apple, all-time highs. Microsoft, all-time highs. Netflix, all-time highs. Big bull day for Netflix. You get the idea. Facebook, just under all-time highs. A little bit of a triple top, but right there. So it is the tech sector taking us higher for now. Will we see that rotation yet again? That's what we're watching for later this week. XLV. So again, XLV, 99.16. Did we break that support level? Should have kept the chart up. But got to go to stock charts. What was the dividend distribution level on XLV? Low of Wednesday, or low of last Thursday, 98.74. That level held today. So you could have been faked out today. If I did not know about the dividend distribution and the artificial change in price, maybe I go bearish on a break of 99.16 support, when in reality, that level would not have broken without the dividend distribution. So the bulls need to regain control, have to get back over 101.34, and that level adjusted is 191. But overall, no bear follow through. Pretty much on any of these days, have not seen bear follow through aside from the dump initially back at the start of June. Financial sector, weaker today. Also had the dividend distribution. Have to see the low hold and have to see a bull break of 25.12. And the adjusted level for XLF that the bulls have to break on the daily is 24.96. Watch. The cruise liners today are clearly weaker. They dropped to lower lows already. Very correlated charts, but weaker. We're watching the airliners now. Can airliners hold the line in the sand level and form a daily higher low with XLF? And again, that's one of the main setups I'm watching this week. Can XLF and these laggard sectors get these bull moves? SMH, healthy daily consolidation, still just under the all-time high. And we'll be looking at 153.95 and 154.77 resistance levels as the only resistance nearby. The VIX, bears back in control. What stands out? High of the initial bounce, 36.30, did not break it on Friday, and here we are looking back towards the low of 30.40. Bulls are remaining in control. They are not proving anything. We are not confirming daily downtrends at this point, which is what the S&P 500 bears needed to prove weakness to us. So again, let's just go back and look at SPY. What did we need for us to say, wow, bears are back in control? That's the top of the COVID bounce. We needed to set the lower high and lower low. And obviously, we are not seeing follow through for now to drop down to that lower low. Gold bull break. Daily double top of 1745 breaking, but we are not breaking the 9-year high yet of 1765. We topped out just under that level by a couple dollars. 4-hour time frame still an uptrend. Anything above 1742 keeps the 4-hour uptrend intact. If we lose 1742 support, that double top at 1765 will be more notable. If the 4-hour uptrend remains intact, bulls are just biding their time to give it another chance. Weekly higher low is set on gold and trying to confirm continuation of this uptrend. Just a couple dollars left to go. Silver has more work to do. Silver, 1819 and 1839, two resistance levels remain. We're still multiple percent below those levels. We need about 4.5% for a bull break, whereas gold needs less than 1%. So a pretty significant difference between the two. XAU, XAG chart, still trying to get bounce follow through as gold is holding on a little bit stronger than silver the last couple weeks. Miners got a bull break on the daily, but again, not convincing follow through. We got our low, high, double bottom, bull break, but still a bunch of previous price resistances to get through. We need 10% on these bull miners to break to a higher high, whereas the metals themselves don't need nearly as much. So a lot of work to go still. Weekly higher low is set on these miners. Worst case scenario would be failure to break 37.49 and then a confirmed weekly downtrend, but obviously no sign of that at this point. Just have to see these metals give a bit more follow through. We are still directly correlated between these metals and SPY, and if you look at the end of the day, SPY reacting to the bear headline of Texas, that's gold dumping as well. Gold stayed a little bit weaker than SPY, but then bounced with it. SPY went to a higher high, gold did not, so we're seeing a little bit more weakness in gold, but just keep in mind that that correlation is still present, which means these miners are more reactive when both the market and gold go in the same direction. Miners react more significantly. Oil. So looking at the August futures chart on oil, we did break to a higher high. It's still not convincing. We've only broken by 8 pennies at this point. The bulls are in complete control. They just want a convincing, 1% follow through over resistance. Anything on the 4-hour time frame above 39.38 is a higher low. So the bulls easily still have the 4-hour uptrend. They just want to move up to 41 and beyond to eliminate the possibility of this being a double top. But still very strong for oil. And again, certainly noticing some overall broader correlation between oil and the market and gold and Bitcoin. Still everything significantly correlated overall as far as asset classes and different markets. And just an example of that. So here's SPY on the daily time frame, what we have to see for the SPY bulls, or what we do see. Just an example, we got failure to break the high of pre-COVID, weekly consolidation, healthy, looking for a higher low, and a daily trend change needed back to the bulls for that higher low to be set. What's Bitcoin doing? Weekly time frame, failure to break the high of the pre-COVID level, weekly consolidation, looking for a healthy higher low, daily trend change today. So there's your higher low and higher high. So again, very similar, all markets doing the same thing. Lack of fear right now in these markets. That's always something we're watching for, that requires bear volume to see fear. But bulls keeping control. Natural gas, is this our daily lower high? Could be. 4 hours still in an uptrend though. So anything above 158 is a 4-hour higher low. Bears are going to be watching for a 4-hour lower high compared to 1654. If we lose the 4-hour uptrend, our daily lower high will be set. And we'll be looking back down at 1538 support. But until we lose that 4-hour uptrend, that's why we have to zoom in. That's a bearish reversal candle on the daily, but it would be a very different daily candle if we were in a 4-hour downtrend versus still being in a 4-hour uptrend at this point. So overall, a victory for the bulls to start off today. Again, when futures opened last night for the S&P 500, we were down a good bit. So a significant recovery. Just watching that 12-hour or 6-hour chart for the potential of a lower high compared to 31.5610. And if we get that lower high, we will anticipate an equilibrium and tightening range as the most likely scenario. So tech in the lead for the bulls. Can the market bulls keep control? And if the answer is yes, then we watch for XLF and laggard sectors to be laggards. Have a good rest of your day. Do good things. We'll see you tomorrow. This is some milkweed. So anyone that gardens or farms barefoot and likes pollinator knows you're good for about 1 bee sting a year. Hopefully I'm getting mine out of the way early, but you can see I'm working with a club foot on the left. Swelled up pretty bad.